Good morning. It is almost noon on the East Coast. It's Monday, December 16th, 2024. This is Robert Sin at CEO Technician on X, at Goldfinger on CEO.ca, and this is Goldfinger Capital on YouTube. As always, we have a lot to get to, as you can see from the tabs. I am back home after a week on the road. I spent the last week in Arizona. We'll talk more about that later in the video. But as always, if you find value in these videos, if you enjoy my content, if you appreciate the time I put into these every week, please hit the like and subscribe button here on YouTube, and feel free to share my content with your friends and family and other investors. So we'll start with big picture, and then we'll drill down. We'll talk about some junior miners. We'll talk about my Arizona trip. Talk about a topic that is on my mind this morning and in the last couple of weeks about junior mining. But we'll start big picture. We'll start with the broader market. Mega caps continue to outperform. So look at Tesla. Just refresh. I'm sure it's up. Yeah, it's up another 2%. Boom. 456.47 for Tesla. So a lot of instructive aspects to this Tesla daily chart here in the second half of 2024. But bigger picture, the IBKR CEO, Thomas Petterfy, IB is one of the biggest brokerage firms in the world, definitely one of the biggest in the US, says, so the Magnificent Seven is still the bulk of where most people's trading dollars go. The Magnificent Seven takes over 70% of the trading volumes at IB. So that is just jaw-dropping. Okay, a brokerage firm as big as Interactive Brokers, 70% of the company's client volume is in just 7 stocks. And that just shows you the power of NVIDIA, Tesla, Apple, etc. The Magnificent Seven, these trillion-dollar market cap companies, they're so liquid. I mean, look at Tesla's volume today, already over 50 million shares for a $450 stock. That is just mind-blowing volume. So they're extremely liquid. The options on these stocks are extremely liquid and deep. There's so many strikes and expiries. So people just play in the Mag 7. And in the case of Tesla, this is a phenomenal uptrend. So a lot of money has been made on the long side in Tesla since the October low, that island bottom that was put in place around 220. I mean, this stock has doubled since October. So 2 months doubling to 1.5 trillion market cap. So $750 billion in market capitalization has been added to Tesla since October. So it's a phenomenal move and very instructive. I mean, you have this island bottom in October, this gap higher, the gap never filled, a little consolidation pullback there, end of October, first couple of days of November, and then the U.S. election result happens, Trump wins, Republican sweep, Musk wins essentially, and you get the gap and run, And you could say, yeah, it's pretty overbought here. I mean, look at the daily RSI 14, it's above 81, but bull markets tend to trend in overbought territory. And notice that at the end of November, it had this 2-week or so consolidation around that 350, 360 level before it continued its next leg higher, this current rally that it's on to new all-time highs. I mean, this is all-time high level. So this is what we call a blue sky breakout. Tough to call tops, especially when the momentum is so strong. There is so much cash out there, that term cash on the sidelines. But it's true, there's almost $7 trillion in money market funds out there right now. Okay, so there's a lot of capital just chasing Bitcoin, chasing Tesla, chasing Fartcoin, chasing Haktua coin, whatever. It's pretty wild, right? But contrast that, the S&P 500, the last couple of weeks has basically gone nowhere, okay, since Monday the 2nd, so it's been exactly 2 weeks, basically gone nowhere. It was at 6,068 on Monday the 2nd. It's Monday the 16th now, we're at 6,080. So 12 points of net change, a fraction of 1% net move in the S&P 500 the last 2 weeks. That is a very tight range. But when we look at that in the context of the daily chart, the bigger picture trends here in the S&P, this is bullish. And I don't want to try to short this market. If anything, trade it from the long side. This is an uptrend, and this is a consolidation, high and tight consolidation near all-time highs. Within the context of a bigger picture uptrend, a very strong uptrend, and this divergence we've seen just in the last couple of weeks between small caps and mega caps is notable. The IWM has been pulling back for the last couple of weeks, while a lot of the Mag 7 have continued higher, like Tesla, and the S&P has basically just oscillated sideways during this time. So why are small caps showing relative weakness? Well, I think it just has to do with the move up in yield. So the 10-year note yield moving from 4.15% to 4.4% in basically the last 2 weeks. So that's a pretty big move up in treasury yields. And generally, when yields are moving higher, investors move up the quality spectrum. So vice versa happens too. So when yields are breaking down, they're making new lows. Investors move down the quality spectrum. They move to small caps. They move to micro caps. They take more risk when interest rates are lower. The yield curve has adjusted lower. They're willing to take more risk. The opposite happens when the yield curve adjusts higher and treasury yields are moving up. They move up the quality spectrum. They move to the mega caps. They move to the 100 billion, 500 billion, $1 trillion companies like Apple that have these huge hordes of cash, right? And also they generate a lot of positive free cash flow, right? So I think that's what's been happening. But generally speaking, I mean, I think I like this IWM pullback, and I like the trade setup, buying it at or near the rising 50-day moving average. You can see that trade setup has worked. It worked in early November. It worked again mid-November, and I think it might be about to work again right now. We'll see. We will see. But I think this sideways consolidation in the S&P has bored a lot of traders to sleep. A lot of people are just saying, I'm packing it in for the year, going on vacation. But let's not forget the bullish seasonality that will kick in roughly 1 week from today. So there could be a very nice end of year trade here in equities, both in the S&P 500, potentially in small caps as well, the IWM, and maybe even in, shall I dare say, gold miners, the horrible gold mining sector. So let's close some of these windows. Let's move on. So I think that, and also very instructive in that Tesla chart is the breakaway gap. So not all gaps have to fill, guys, and the breakaway gaps, when those really happen and they are truly breakaway gaps, those are the signals, the technical footprints on the chart that lead to clues to make a lot of money. And that Tesla chart is full of technical clues that led to some very big trading profits for some investors the last couple of months, including Musk himself, who is now $400 billion. I think the Fed is in a pickle here. So we're going to get a rate cut later this week. I think it's basically 99%. So I don't think there's any surprise in the Fed cutting 25 basis points to 4.5%. But where there could be surprise is maybe this will be a hawkish cut. So maybe Powell will be hawkish in his tone, the Fed statement itself might have a little bit of a hawkish tone to it, that, you know, acknowledging that inflation is sticky. It has not continued lower. We were in this inflation downtrend throughout 2023 and into early 2024. But in the last few months, I think maybe we could say the last several months since the summer, inflation has been stubborn. Core CPI has not continued lower. It seems to be sticky near 3%. Inflation persistence. So the New York Fed has a measure of inflation persistence. It might be hard for you to see on this, but basically it's been trending slightly up in recent months. Okay, so core CPI sticky near 3%. Inflation persistence sticky, stubborn, not wanting to move lower, it seems. And we can see this overlay to the late 1970s, and sort of like we're just entering 1977 here. And we'll talk more about that later with respect to gold. I doubt it's going to play out exactly like the 1970s, but certainly we shouldn't ignore the fact that the moderation in inflation in the last couple of years since the inflation surge of 2021 is following that mid-70s path pretty closely, and we could be setting up for a rebound. So let's not ignore that. I don't think we're going to 14% inflation, but even if we went to like 5% in the next year or two, that would be problematic, right? That would be very problematic. But the Fed is in a pickle, right? Because remember Powell's Jackson Hole speech back in August, he really shifted the signaling to employment, saying he doesn't want to see any further weakening in employment, no further weakening. And there's a lot of signs. I'm not going to show it all. And I had a website up earlier, but it had a lot of pop-ups I didn't like. So I'm just using this one chart to sort of make my point. But the BLS, there's a lot of evidence, mounting evidence, the BLS data is inaccurate and flawed. A lot of it has to do with the fact that the surveys the BLS sends out, people are not responding to. So like before the pandemic, the response rates to like the JOLT survey or the CES survey were like above 60%. Like most people responded. Now they're like 40, 30%. Like just people don't respond to these BLS surveys. And there's a lot of evidence that the employment data the BLS publishes is overstated, right? There's a lot. The private payrolls are in sharp contrast to the non-farm payrolls. A lot of evidence without government employment, the employment numbers would be way lower. The increases in government employment. Well, who's stepping in as president next month? And what do his advisors want to do to government jobs, right? So I think that's not catching a lot of airtime, that the employment picture could fall apart here the next few months, right? And we're already seeing, so the continuing claims, jobless claims, are turning up, right? And just look back here to the left in this chart. When it has turned up like it is now, it almost always coincided or led to a recession. Even though it might have been a sort of short and sharp one, it still led to a recession. So there's a lot of question about whether or not we're in a recession now. I'm not sure we are. There's too much good data to really indicate we're in a recession, but maybe we're entering one. And maybe some of the new administration's plans early on could sink the economy into a recession, including the tariff plans. There's a lot of uncertainty. I'm not saying I know. I really don't know. There's a lot of uncertainty how the tariffs are going to play out, how the shrinking of government is going to play out in Trump 2.0, right? There's a lot of uncertainty, and anybody who thinks or says they know what's going to happen in 2025 definitely raise a couple of eyebrows there. I don't think anybody knows. But one thing for sure is this placid market environment is in sharp contrast to the level of uncertainty out there in terms of the future course of Fed policy, what Trump is actually going to do with some of these big economic issues, these global issues, and just what is really happening with the jobs market, right? And what does AI do to the jobs market or start to do to the jobs market over the next year or two, right? There's a lot of uncertainty, guys. There's a lot. So we can agree that inflation is sticky. It's not back to 2%. It hasn't just fallen like it was supposed to. It's sticky near 3%, and there's some signs it's starting to turn higher. So just like there are signs that unemployment is turning higher and jobless claims are starting to trend up ever so slightly, well, there's the same signs on inflation that it's starting to trend up ever so slightly. So that is putting Powell in a very tricky spot. So it'll be very interesting to see what is said here this week and what some of the Fed speakers, when they get out and start speaking again, what they say and what they start to signal. But this chart of 10-year yields, I mean, it's undeniably bullish. I mean, you have this big uptrend, you have a correction within the context of an uptrend, and then the resumption of the bull market, MACD bull cross. I mean, just this is, if this was a stock, I would buy it, right? So potentially, you know, that's a headwind for some sectors of the stock market. And I think that's why we've seen small caps pretty soft. I think that's why we've seen some other sectors, mining, metals, oil, soft here the last few weeks. I mean, look at Chevron. But if inflation is really trending up and if the Fed is stuck where they can't hike, they can't cut, I don't know. I think I want to buy the oil sector. I want to buy the mining sector here. I mean, remember, the late 70s was a great time for these sectors. So is it different this time? My bias would be to buy Chevron against that 150 level, 200-day moving average. Here we are. I just refreshed. It's down 2%. So this is very interesting what we're seeing across the market. The oil stocks, the deep value stocks are getting hammered. Small caps are underperforming. And the Mag 7, Tesla, the S&P components, that's what it seems to be. It's all about. Like, this market is just, and Bitcoin, right? That's what this market is all about. Uranium, URA, this test of this 20, I mean, this is, look to the left, this is support, this 29 level in URA. It's testing it right now. Is it going to, I thought everything was bullish for the URA components. I thought we're in a nuclear energy renaissance and bull market. What's happening here, right? So a lot more questions than answers. So I'm very much in the question here today. I don't really have the answers to all these questions, right? So I think we want to keep asking the questions and keep trying to figure out what is really going on across the market, right? Because there's a lot of sector divergences going on here. You know, despite the S&P basically flat, there's a lot of movement that's going on, you know, underneath the surface of this stock market, this overall stock market. VLO, I mean, this should be the time to buy, you know, VLO for a seasonal trade at support. But man, what a beatdown the last couple of weeks. What a beatdown. So let's talk gold. Let's talk gold. So we know we have this 1970s inflation-esque setup, right? And if we look back, so here's gold 2670. This is the weekly chart going back 2021. Okay, we all know this. what happened in gold the last few years, how 2024 has been a great year for gold. Well, so this is going back to the 70s. So if we really are in early 1977 in the inflation analog, right here's early 1977. Well, here's gold in early 1977, about 140, 150 an ounce. It was just in an ever so slight uptrend, just barely beginning to wake up in 1977, and just continued trending up, just a very steady, quiet accumulation throughout 78. And it was only in late 78 that it really started to take flight. I think probably the breakout above 200 started to get some headlines for gold, and then it got to 250. Right, so these sort of round numbers, psychological levels, sort of saw an increase in volume and trading activity, and then we saw a sharp drop there in late 78. So it got to 250, dropped back under 200. So that's a 20% drop, right? Like nowadays we think $50 in the gold price, that's nothing. That's one day's volatility. But back in 1978. The drop from 250 to 190 was a more than 20% decline. Some technicians would have said, "Well, it's in a new bear market. That's the top in gold. We just topped out." But look at what happened. It found support. It's funny how it found support sort of near this 14-week moving average. I have this green one. And then look at what it did throughout 79, just a running bull market, just continuing to make higher highs and higher lows. And I think we don't want to lose sight of, that's the simplest definition of a bull market, is price making higher highs and higher lows. So throughout 77, 78, 79, it was undeniable that gold was in a bull market phase, a very powerful bull market. And here, as 79, we got into September, October 79, here's where the bull market starts to turn parabolic, right? But this is the first phase. This is the first time in history that the gold chart begins to turn parabolic. And so let's go back. So in early 77, it was 140 an ounce. When the market really starts to catch some animal spirits, the volume really picks up, starts to catch some headlines, it's almost $400 an ounce, right? So almost a 3x in less than 3 years, right? And now, we're September 79, inflation is super high. The Fed has obviously made an error. There's a lot of other things going on with Iran, the Soviet Union. I was just born at this time, so I can't tell you the whole history of it, but I definitely know the big talking points about this time. And then we get a correction, right? We get a correction. So it hits 444 first week of October, and it proceeds throughout the month of October to drop 20%. So there's the 20% drop that gold likes to do. These gold bull markets like to have these 18, 19, 20, 21% shakeouts. And then boom, the fuse is lit in the final weeks of 79 and the first 3 weeks of 80. And what a time, what a time. So it goes from 390, end of November. So Thanksgiving 79, gold is 390. January 21st, it hits 873. So less than 2 months, more than doubles. Right? And that was after it had done a 3x over 3 years. It had done a 3x. All right, so it was already a 3x there, Thanksgiving 79. And then it did more than a double in less than 2 months. And then that was it, right? This candlestick, this weekly candlestick, wow, huge bearish outside reversal. I can only imagine what the volume was during that week. And this is just classic topping chart patterns here, right? And obviously it went into a pretty pronounced bear market throughout 81. And we won't go through the whole history of gold, but I think this is very instructive. And so what does it tell us about where we're at now? Well, first of all, you know, you could liken this 2021, 2022 phase as very much like this 76, 77 phase. Now, obviously, it's different. It's a much different price level, but it was a basing consolidation, right? The real bull phase did not start until the final 2 months of 2023, right? So we're only really a year into this latest bull phase in gold, right? We really are only a year into it. So either, in my mind, we're still in 1978, or at the latest, we're very early in 1979 right now. Okay, if we use this analog to the 70s. So that means there's at least a year left, in my mind, in this current gold bull run, right? And that matches up well with this inflation contrast to the late 70s, right? So if we're in 77 or 78 in terms of the inflation chart, well, there's still a lot more fireworks to come, right? Anyway, so I'm not using the 70s analog to guide all my choices in the gold miners or the gold market. In fact, very much not so. My investment in gold is much longer term than a 6 or 12 month outlook. But this is just very interesting because the analog is pretty strong here. And at the very least, let's just use that guide of what it looked like at the end of that late 1979, early 1980 bull run and use it as a guide for what a top might look like today. Well, there's no real signs of that here, okay? There's no weekly candlestick that is like a 10% plus bearish engulfing candlestick, right? It's not here. And even the volume is not characteristic at all of a major top, right? The volume is not, it's not a top. This is not what the end of the run looks like, right? We're still in the move. We're still in the bullish phase. There's more to go, okay? So that's my analysis of it, okay? I'm interested to hear your thoughts. And silver, so, let's go back to the most recent bull run in silvers, 2010, 2011. This is what it looked like from $17 an ounce in mid 2010 to $50 an ounce at the end of April 2011. So 1 year, it did almost a 3x, right? It did almost a 3x, and this is what the end looked like. Again, it's this very outsized, huge red bearish candlestick on the heaviest volume of the move. That's what a weekly candlestick looks like at the end of the move, right? Well, do we have anything like that here in silver right now? No. No, we don't. And this is still an uptrend. So as upset and annoyed as silver bulls are, especially silver mining bulls, why are we still only at $31 an ounce? What the hell, blah, blah, blah. It's an uptrend, guys. This is lower left to upper right. And the market is not here to appease you on your limited time frame, right? If anything, it's here to torment you, test your patience, test your conviction in the trade. And only after you're at your wit's end will it have that ninth inning move like we saw in the gold chart, or what we saw here in spring 2011 in silver, where it did this incredible march from 30 to 50 in a matter of weeks, right? And then just like the juniors, so there's a lot of negativity out there right now. And I want to acknowledge, like, junior mining is probably the most frustrating sector of the entire stock market. Okay, we can agree on that. The failure rate is high. We can agree on that. There's been a bunch of bad news in 2024 across the sector, whether it's heap leach pad failures or what have you. Okay, we can all acknowledge that. Got it. But guys, the level of negativity in this sector is just, unless somebody is talking their book and they're up to their eyeballs in shares of a stock, nobody has anything good to say about anything, right? Well, look at the Go AU chart, right? So this is an ETF. This is a junior gold miner ETF. Well, it's up in 2024, okay? And it was up in 2023. And actually, since late 2022, it's gone from the lower left to the upper right. I know it's not up as much as everybody wants it to be. And we should be at $100 a share on this ETF. And silver should be $100 an ounce. But this is still an uptrend, okay? And yeah, I mean, since October, the sector has not felt good to be long of. It has not felt good to be invested since the October peak. But let's acknowledge that 2024 has not been as bad a year as so many seem to make it out to be. Yes, in certain stocks, it has not been good, that's for sure. But within the overall junior mining sector, there have been winners. There have been big winners. Stock picking has paid off. Stock picking is not easy, but it has paid off. And again, I'll acknowledge this ETF is up in 2024. Okay. Here's a stock that is very frustrating. Newmont. I mean, I think Newmont is the poster child, really very emblematic of sentiment and frustration across the precious metals mining sector. And it's fitting that here we are in the final weeks of 2024, in the midst of tax loss selling season. I'm sure Newmont has received some tax loss selling in recent weeks. And here's the world's largest gold producer fighting for survival, fighting to hold major support at $40 a share. Look to the left on the chart, April, May, June, November, December, $40 a share. This is major long-term level. And here is Newmont with gold at $26.70 an ounce, a record high average selling price, quarterly selling price for Newmont. And, it's fighting for its life here at $40 a share with this $3 billion buyback. It's very ironic, right? It's fitting. And look, I've been wrong on Newmont the last couple of months. Totally acknowledge that. But it is really interesting to see this setup, that it's at this share price level. There's so much negativity on this stock, yet Q4 should be a record quarter for this company. I don't know. The market is saying that things continue to not go well for Newmont. It had this brief run from June to the end of October, and then obviously Q3 earnings really hit it with a sledgehammer. We'll see. I feel like this is a potentially really high-quality contrarian setup, but longs have been wrong for the last couple of months in Newmont. But I will say it is up in 2024. So as much negativity as there is, look over here. People say, well, gold's up 30%. So, Newmont should be up more than 30%. Yes, true. But the way people speak about this stock, it's as if it's down 30% in 2024, when actually it's still in the green. TSX Venture Composite, we're down 3 days in a row. Again, huge amount of negativity here, but the moving averages are going higher, right? So they're upward sloping, but anybody that talks about the TSX Venture talks about it as if it's in the cemetery and it's going the way of the dodo bird. Dolly Varden. So this one is ugly since October. It was performing great earlier in the year. Seasonality is clearly not favorable for Dolly Varden right now, but this drop has been a bit on the outsized side of things, to go from 145 to 98 cents in basically a straight line in a relatively short period of time. There's not really any news aside from just the silver price volatility, the gold price volatility, and maybe just overall negativity on the sector. But this is feeling like it's overdone to the downside here, quite frankly, you know. And this $1 level is a big area of price memory for DV. You know, it's served to cap rallies in the past. Now we'll have to see if in this $30 plus silver price environment it serves to cap the downside and serve as support. But I feel like we're due for some drill results from Dolly soon. I will have to see if they put those out by the end of the year or they wait till the first week of January. Vizsla, I had a very good interview with CEO Michael Connert last week. That's up on my YouTube. It found support at the 200-day moving average. I got to admit that this recent price action looks kind of like a bear flag. But I tend to give the benefit of the doubt to the big support levels in Vizsla. And 170 on the Amex is a big support level. Obviously, it also looks like $2 is also a key resistance level that sort of capped the rally that was starting earlier today. But yeah, you know, we'll see. It's performed better than a lot of other silver juniors in the last few weeks. So let's talk. Oh, and then I have these two slides about central banks buying gold. Well, we know central banks are buying gold, but the big thing is that China is back on the bid. China was buying gold in November. I don't think there's any accident that China got active again in the gold market after the U.S. election outcome. I expect China will continue to accumulate gold. I'm sure it's accumulating gold right now, and it will continue to buy gold into 2025. And then this survey of central banks, more gold buying is expected. But we know that. You know, we know the stuff that is portrayed in these two graphics. So let's go to the juniors. So first, my Substack, Goldfinger Capital, please subscribe. Sign up for it so you get my content as soon as I put it out. This is an interesting one about Sir Isaac Newton, the South Sea stock bubble of the early 1700s, and then an example from the recent history of the Canadian microcap space, this Sona nanotech stock that just had this absolutely incredible move in 2020. One for the history books for sure. And now you could pull up the quote. It's 25 cents a share on the CSE. So lots of cautionary tales there from Sona, and just how carried away some investors get, right? Like, never go all in on a stock, especially a microcap stock. Okay, please don't. So I was in Arizona all last week. Why did I go to Arizona? For mining projects, for copper, for silver. So first on the agenda was Barksdale, and I had actually never been to the town of Patagonia. I never been that close to the Mexican border in Arizona. That was very interesting, beautiful scenery. I like the setting there. Arizona is the copper state. It's a big mining state in the U.S. Some of the biggest copper mines in the world are in Arizona, including Freeport's Morenci mine that produces 300,000 metric tons of copper annually. That's a lot, 300,000 metric tons from one mine is a big, it's a big mine. You can see it's big. It's very big. There's multiple pits. And just great location. So Arizona is a great location for mining projects. Rich mining history. You're on the border with Mexico. You're close to California. You can get to the port of Los Angeles, Long Beach, pretty quickly by rail, right? So there's a lot of infrastructure advantages in Arizona, and so Barksdale is drilling what's called the Sunnyside project. So there's a porphyry there on their side of the property across from South 32's Taylor deposit. So the CRD deposit that they're building. This is going to be a mine. It's their guidance is it will be in production by the end of 2027. And you can sort of put together these zinc, lead, and silver grades, and you can realize, well, this is pretty high grade actually. You know, when you're talking about $220 a ton of ore value over 100 million plus ton ore body, the economics start to look pretty compelling. And so that's why South 32 has invested so much in the deposit that's right adjacent to Barksdale's, Sunnyside. So I'm not going to get into the whole Barksdale story. You can read my tax loss list. You can watch my video. This is the scene from the road leading to the rig. This is where the rig is drilling right now. It's still drilling as far as I know. The company just put out a news release last week. And they updated. There's me looking at some copper sulfides and drill core. And they put out this news release last week with some nice core picks, some pretty semi-massive sulfides, right? It looks good. It looks good, but we'll have to see what the grades are. Full update there. The hole is still in progress. It's in the carbonate section, the target rocks essentially. And they plan to drill, I believe, through the end of this week. Obviously, they will take a break for Christmas, and then the plan is to be back early in the new year. So Barksdale was a good visit. I really like their VP of exploration. His name is Alan Roberts. Terry Ann helped coordinate the trip. Yeah, it was a very good site visit. I really enjoyed it. And then I went to the Cactus mine, so further north. And it actually turns out that this mine is part of the same porphyry trend extending up from Mexico into Arizona. Okay, so I didn't know that, but you can very clearly see all these dots. These are all porphyry deposits. And you can very much see there's a trend there. So it was previously called the Sacaton mine, the Sacaton mine. So it was operated by ASCU in the 70s and 80s. Here's the big pit, still there today. And this is just impressive, 6,000 acres of private land. Okay, that's what the company has at Cactus. Oh, I guess it's technically 5,720 acres, but let's round it off to 6,000. And then Santa Cruz, which is IE's project, is next door across the highway. Higher grade, copper grade's above 1% at Santa Cruz, but very deep. It's over 1,000. The ore body is more than 1,000 meters deep. So these deep buried porphyry deposits. Cactus, much shallower min, but lower grade, 0.41% average copper grade over the entire life of the mine. But there's an enrichment. There's a supergene layer that obviously will be targeted early in the mine life. A lot of infrastructure advantages at Cactus. Here's Allison, their IR director. Yeah. And the company is basically on track to produce a pre-feasibility study in the early part of the second half of 2025. So maybe that's August, September, something like that. But that's the plan. That's an important study. That pre-feasibility study will definitely get a lot of eyeballs, tighten up the economics, the mine plan, et cetera, et cetera. So overall, also a very good site visit. And it's interesting because the town of Casa Grande is like, I don't know, 4 or 5 miles away from Cactus. It's not that far, which you might think, well, that's kind of weird to have a mine that close to a town. But actually, if you know mining, it's very common in Canada as well. It's very common. The reason why the towns exist is because of the mines. And 87% of the community supports the Cactus mine going into operation, according to recent third-party polling. I'd like to see more details of that polling and maybe some more polling. Because, I mean, if the numbers really are 87%, that's fantastic. And the mine is probably a slam dunk. But again, the devil is often sometimes in the details. I don't know what the actual support is, but they say it's 87%. Cactus is a very high quality, and so is Santa Cruz, and there could be a potential synergy at some point in the future between those two assets. Obviously, they're next door to each other. Scale matters in mining, but right now they're held in separate companies, different valuations, and different plans and timelines for both assets. So we'll just have to see how this unfolds near Casa Grande, Arizona. Now, I want to talk about negativity in junior mining. So I don't have this scripted. I'm not exactly sure what I'm going to say here, but one thing I have noticed, I mean, I've noticed it for a long time, but especially in recent weeks, is just how negative so many people are in the sector. And I'm talking about investors. I'm talking about even analysts, and even, and most especially, CEOs. So if you're a junior mining CEO, you're a spokesperson for your company, no doubt, right? Your job is to espouse the value, the vision of your company, communicate it effectively, and enhance shareholder value as best you can in an honest and objective way, or subjective too. But you're also a spokesperson for the sector as a whole, whether you like it or not. And I think that is lost on some of the CEOs in the sector. And so many times I'll have a conversation with a CEO, and just anytime other companies or drill results or news releases are brought up, they have a negative spin on it. Only their company, their asset, their drill results are good. There's always a glass half empty take on other companies and other drill results and other CEOs even, right? And just generally that lends a bad taste. It's just not good, And look, we know about the high failure rate in the sector. We know about some of the bad news that has happened in 2024. We know about that stuff. Like, if you don't have your head in the sand and you live under a rock, you're aware of these things, right? But there could just be a more positive tone across the sector. I think that negative feedback cycle is very much in effect, across the space right now, especially here as we wind up 2024. Gold and silver have been under pressure in recent weeks. We know we're in tax loss season. Volumes are a little lower. Bids are getting hit. We got it. It's easy to be negative. It's easy to look at the Newmont chart and be negative. Got it. But I'm not sure there's much value in just being negative and hopping on the negative bandwagon. I want to give one example of, you know, the SSR mining chart. I have no position in SSR mining. I didn't own it before. I got no dog in the fight, but I just want to point out that they had this heap leach pad failure in Turkey back in February. It was a horrible accident. 9 workers died. Loss of life is always, you know, regrettable and sad. And there was a huge amount of negativity at the time. You know, as soon as the accident happened, the video got out there, the news started to spread. The negativity was palpable, and it was very easy to be negative. It was very hard to be positive. You know, this is like a $2 billion market cap company that lost over half its value basically instantly. And there was some question about whether they would survive this, you know, the cleanup, the cost of the accident, the fines, I don't know, it's $200, $300, $400 million, somewhere in that ballpark. I don't know exactly what it is. Again, I don't have a dog in the fight. I don't follow the company, but I just think it's interesting to see how this has evolved from capitulation level negative sentiment, a 60% drop from 10 to 4 in the share price, and just look how it has sort of worked its way higher throughout most of 2024. And recently, it had quite a nice move from 5 to 8, pulling back a little bit now. But, you know, if somebody had the balls, the foresight to buy at 4, they doubled their money in less than a year, right? That's better than most mining stocks, quite frankly. And obviously, it's easy to say in hindsight, it's easy to see things in hindsight, but it's also another lesson that just excessive negativity and piling on rarely generates alpha. In fact, quite the opposite. It leaves opportunities on the table. And maybe some people were even betting at some point in March or April that this company was going to go bankrupt. They might have been shorting this. Well, they lost quite a bit trying to short this thing, right? And you know, rarely does the obvious narrative, the popular narrative, generate much value in financial markets, right? And I just want to point that out, and I just want to point out that there's a lot of negativity right now in the junior mining sector. Even diehards, longtime analysts are negative on it, giving up on it, and I get it. It's hard. It's hard to look at some of these stocks every day and some of the sentiment out there, and maybe it's just a sign people need to take a week off or 2 weeks off and just tune out until January and go on vacation, go do some yoga or something. Maybe I'm telling myself that. Because remember, these videos, it's just me talking to me, right? Anyway, junior mining news. So Canada Nickel, Fireweed Metals, Endurance Gold. I'm going to go quick. I want to really Mark Selby, the CNC management team. You know, there's been a lot of negativity on this company, quite frankly. And you can look at the chart. It's not great, but I got to give Mark Selby, the CEO, I think chairman and CEO, a lot of credit here. He has continued to de-risk this asset. He continues to sign up more partners, more shareholders, more investors, stakeholders in Canada Nickel. And really, I want to just say it's a master class in how to advance a junior mining company in, I think it's less than 5 years now, right? I mean, really, the story was at its inception point in early 2020. Here we are at the end of 2024, and they get the biggest investment by a First Nation in a base metals project in the history of Canada, $20 million. And it gives the First Nation, the Tequa Tagamu Nation, the right to own 8.4% of the company's outstanding shares and the right to nominate one individual to the board of directors. So it's impressive. And this sort of, you know, enrollment of stakeholders is powerful, and I think it's a great example for the industry. And so again, I have no dog in the fight. I have no position. I just want to point it out. I think we need to point out good news more often, regardless of whether or not we have a position or we're talking our book, right? Just share good news. You don't have to have an economic incentive to share, Fireweed metals. So this is just fantastic. And Mac Tung, I spoke about Fireweed at MIF in March. And really, Mac Tung was a big part of my bullish thesis back when the stock was about $1 a share. Now it's almost $150. So let me pat myself on the back, up 50% since March. But Mac Tung was really, I felt, a world-class special asset. So it's basically an outlier in the tungsten space. It's the largest high-grade tungsten asset out there. And you can see it's just, you got all these Chinese mines. Well, they're lower grade, and many of them are smaller than Mac Tung. So they got 35.4 million Canadian dollars government funding for both the U.S. and Canadian governments to advance Mac Tung and to build essential, key infrastructure for the asset. So great news for Fireweed. Kind of weird they put this out after the market closed on Friday. I'm not sure what the whole story was there, but maybe there was some very good reason. I don't know. But fantastic news, and it just shows you, well, look, Mac Tung is a special tungsten asset. Not many companies have a Mac Tung. There might only be one company that has a Mac Tung. But clearly, tungsten is on the mind of Western governments, and so that's a real affirmation of that. And then endurance gold. So I'm going to have more on this in a separate video later, but I just want to draw your attention to the news this morning. This is actually a new discovery. The lower imperial zone, you can see the grades, the meterage. You can look through the news release, the section map, the plan map. Endurance just keeps drilling pretty damn good gold intercepts, regardless of whatever the market is doing. It's hard to find fault with the results here. Okay, so again, I'll have more on endurance in a later video, but definitely want to draw your attention again to companies doing good work. And obviously, I own Endurance Gold, and they're a sponsor of Goldfinger Capital. I own Barksdale. They're not a sponsor of Goldfinger Capital. I don't own Fireweed or Canada Nickel, and neither are a sponsor of Goldfinger Capital. So that's it for this week. Thank you so much for tuning in. And again, please hit the like button if you found value in this video, and have a powerful trading week.